Hello and welcome to the Daily Analysis. The S&P 500 index and the Dow Jones on February 23rd experienced a bullish trend on the last trading day, and ultimately, after liquidity was collected, the upward movement became limited.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
As we had analyzed, the value gap was filled. And with the start of Monday and the opening of the Asian sessions, there was selling pressure, which was based on news that the U.S. Supreme Court declared the tariffs imposed by Donald Trump illegal. And the global tariffs imposed by Donald Trump were increased from 10% to 15%. Following the decision made by the Supreme Court regarding Mr. Trump, Trump ordered that global tariffs be raised from 10% to 15%. This decision intensified the risk-averse sentiment in financial markets. However, the 15% import tariffs were implemented under Section 122, replacing the previous structure. These tariffs increased the likelihood of a simultaneous sell-off of Treasury bonds, stocks, and the dollar if concerns intensify, which could lead to a decline in the S&P 500 and Dow Jones indices. By analyzing the S&P 500 symbol on the 4-hour time frame, we observe a downward price movement. We can see it. During the Asia session, this was accompanied by selling pressure, and eventually, near the London session, with buying pressure, it started moving upward, and it is predicted that the price will continue to rise. It is expected to collect liquidity on the buy side. If this upward movement is accompanied by bullish displacement candles and closes above the swing highs at the 6,918 level, it can continue its bullish trend and eventually enter an order block zone at the 6,950 level. After that, it could enter a bearish phase. By analyzing the S&P 500 symbol on the 1-hour time frame, the price is moving upward. We can see that it has formed a 3 white soldiers candlestick pattern, and after that, it was accompanied by even more buying pressure. If the buying pressure continues to increase and it manages to close above the FBG zone, it can continue its bullish trend and eventually enter an order block zone at the 6,958 level. However, if it only collects liquidity on the buy side and enters a broker block zone, and if there is a sign of weakness in the bullish trend and a CISD or change of character level is broken, we can enter a sell position and place the stop loss behind the broker block zone so that it covers the sell side liquidity targeted by smart money traders and AI. CTs can use the Liquidity Finder or Liquidity Detection TradingFinder indicator to identify liquidity zones. These are among the main factors that attract price towards themselves, such as a liquidity trend line and a double bottom. Here, it has been identified that can attract the price towards itself. And after collecting liquidity on the buy side, the price can rebound towards the liquidity on the sell side. It can change its direction. By analyzing the 1-hour time frame of the symbol close to, we can see the price movement, which in the last trading day is moving upward. However, it was not able to close above its previous highs, and ultimately, after a stop hunt, it returned again within the range. It closed within the range, which is expected to result in a bullish move, collecting liquidity on the buy side. And if it closes within the consolidation range, it could be accompanied by increased selling pressure. However, if by the end of the day the price closes within Friday's daily candle, it could move downward in the coming day and target lower levels. Now, with the 4-hour time frame analysis of the Nasdaq symbol, let's observe the price movement. After breaking a level, break of structure, in the next bullish leg, it failed to close above its previous swing high and only performed a liquidity sweep, accompanied by selling pressure, which could lead to an upward move later in the day. It might collect buy-side liquidity, which is an FVG, fair value gap area, and there is a junction block area here that could attract the price toward itself. However, if there is selling pressure during the New York session, the price may only perform a liquidity sweep. With increased selling pressure, it could move further down to collect sell-side liquidity and enter the order block area at the 24,550 level. Analyzing the 1-hour time frame of the Nasdaq symbol, we can observe the price movement. There is a buy-side liquidity line here, along with a buy-side liquidity pool area. In this section, at the 25,129 level, there is a CP or continuation pattern area, where after a stepwise liquidity collection, the price could react to this area and then, with selling pressure, move downward. Overall, the market outlook, based on fundamental factors and the general perspective, is bearish, and precisely, the price can only collect and sweep the liquidity and gather enough energy to make sure to target and specifically aim for the much lower levels. With the analysis of the Dow Jones symbol on the daily and intraday timeframes, we observed the price movement on the last trading day. After a liquidity sweep, there was a bullish candle, but it failed to close above the candle. It was unable to close above the previous day's candle, and with the start of Monday, after a selling pressure, it moved upward again, which is expected, to continue its bullish trend throughout the day. To collect the buy-side liquidity, if the overall market demand begins to weaken significantly, it can only really have a quick liquidity sweep above the highs. And immediately after that occurs, it will likely move downward to collect all the remaining sell-side liquidity below. In this section, based on price action, we see that the price has tried 3 times to break the levels to the upside. But in the end, there was only one liquidity sweep and it re-entered the range-bound area. After that, there was selling pressure again, followed by a bullish candle that failed to close higher than the previous candle. It couldn't close above the previous candle and faced selling pressure again, which indicates a highly significant resistance level. If the price closes above the 49,807 level and the trend is confirmed at 49,916, the Dow Jones could experience strong bullish pressure and target its all-time highs. Analyzing the Dow Jones on the 4-hour time frame, we can see that the price movement has only made a 5th liquidity sweep. It entered an FBG zone and ultimately moved downwards under selling pressure. After collecting external liquidity, it shifted towards internal liquidity. It balanced the internal liquidity and then moved downward again. It could continue to move upward during the day and collect the buy-side liquidity. If higher highs form on that pin bar candle, trading strategy number 2 is established, where we can set a stop loss and a limited position, aiming for the sell-side liquidity target. However, if it manages to close above the pin bar candle at the 49,906 level, we can follow the trend. It will continue its upward move and head toward the limited order block level at 52,870. With this analysis, up to the 1-hour time frame of the symbol, Dow Jones. Price movement. We see an upward movement and an FVG zone is located in this section. If it manages to break through this FVG zone at the 49,604 level, if it fails, it could get rejected from this area and move downward from here. If it manages to go above the FVG zone, its next target will be an upward move to collect liquidity on the buy side, and after that, its final target could be liquidity on the sell side. Set it there. In the S&P500 index, we can analyze price movement using the VIX chart. We can do that. We can examine it, and in this chart we see that with the start of Monday, there was a gap, opening at the 20,160 level. After that, there was selling pressure, which, with the decrease in the VIX index, could mean the S&P 500 is bullish, but only if the VIX moves downward and then enters a bullish phase and stays within its bullish channel. It can remain there. It could push the S&P 500 index downward. Wishing you success and profits.